But this is what sets the stage for the next bull market, right? Supply gets so constrained, gets so tight that all of a sudden, a small amount of capital flows in, and Bitcoin can do nothing but just go up. And you can kind of see that, that long-term holder supply draws down into these parabolic bull markets. What's that saying? Well, you stack for 3 years Bitcoin 5x's. You take a little bit off the top. That makes sense, right?
You're still in LeClair on the Bitcoin supply shock.
The narrative of, BlackRock's ETFs are coming, the suits are coming, kind of was said last cycle, but I think this time is going to be kind of another order of magnitude larger whenever that time frame comes. And the good, the bad, and the inevitability of it all. Is it a bad thing that Larry Fink and the boys from Wall Street are going to come into Bitcoin? Well, we don't really have a say. Bitcoin's permissionless, but I guess how do we think of that all? All right, so this first chart's pretty obvious. Just drawdown for Bitcoin all-time high. Bitcoin notoriously volatile, right? That's kind of one of the main talking points of skeptics is how volatile it is, right? Okay. Here's Bitcoin's price, realized price. What is realized price? You can also think of it as like market cap and market realized cap. It's essentially like the realized market cap of Bitcoin would just be all of the supply at the price it last moved, whereas a market cap is just the circulating supply multiplied by the price it last moved. So realized price is just the average cost basis of all Bitcoin. It's the price at whichever UTXO last moved, valued at that price instead of just the current exchange rate, right? And so what you notice is it's a lot less volatile and it's kind of just going up in this lockstep fashion. So here we have those two same data points and MVRV score. What the heck is that? Market value to realized value is just a ratio of the two, standardized. It's a z-score kind of layered on top of that. And you can kind of see a really distinct boom and bust cycle, right? We can all intuitively feel Bitcoin's boom and bust cycle. You can, whenever you open up a linear chart of Bitcoin, it's either a massive bubble or it's dead. And there's basically no in between. Well, this is kind of contextualizing what's happening here, right? The interplay between that average investor cost basis that really doesn't draw down all that much and kind of moves up in exponential fashion in a bull market versus, the hyper volatile day-to-day exchange rate of Bitcoin. Okay. So here is the 1-year realized volatility of Bitcoin. It's annualized volatility, 1-year basis, and the realized price annualized volatility. And you notice that realized price annualized volatility, big words, right? But how much it's fluctuating is a lot lower than Bitcoin, right? So Bitcoin is hyper volatile, that's a big narrative. Bitcoin's 80% down from all-time highs at 15,000, after FTX collapsed, down from the high of 69,000. But like those metrics, those kind of, eye-grabbing mainstream media stats aren't really indicative of reality, right? Like not everybody, barely any Bitcoin moved at 69,000, right? It's just like, it wicked up there, it wicked down. There wasn't really that much like capitalization at that point, right? And so we can kind of see with this average cost basis what's actually happening. Bitcoin's not that volatile, on average for all the users in the network, that cost basis. It's just the mark-to-market exchange rate. So here's these same stats, but the drawdown from all-time highs, right? Bitcoin, again, the narrative is like, it's so volatile, no one can ever touch it. It's a misrepresentation of what's actually happening underneath the surface. So the exchange rate, boom and bust, minus 70%, minus 80%, keeps on happening. The realized price, that average price, that drawdown from its all-time high, it basically only ever goes below 20% maybe. So that kind of like, you can think of the realized cap metric, that realized price, average price of all Bitcoins are like, it's not a perfect measure, but like every Bitcoin valued at the price it last moved is a pretty damn good measure of like, the vitality of the network, right? It's far better than actually just, multiplying the circulating supply by the price, which is how a traditional like equity market cap would be calculated, right? So with Bitcoin, we have a really transparent UTXO set, transparent supply, so we can do some, cool things with it. So here is the realized cap, the 90-day percentage change, right? And without the exchange rate layered on top of it, just the realized price, right? And so again, far less volatile than the daily exchange rate, and it's showing that 90-day percentage change. And what you can notice, right, is really diminishing returns here, right? And so, it makes sense. It's a lot easier to pump Bitcoin at $1 than it is $10,000 or $100,000 if we get there one day. But this is just kind of showing that. And now I'm going to show the absolute change in realized cap, right? So what to know? The realized cap percentage change is obviously diminishing, right? But the absolute change is not. It's actually getting a lot larger, which obviously makes sense, right? More capital is coming into this asset with every cycle, with new adoption waves, with better tech, right? The Lindy effect, we know these things, right? You can sense this, but this is just kind of putting a visual on what's happening. And so we're going to change pace a little bit, and we're going to kind of move to what drives these cycles. But here is long-term, short-term holder supply. This is just long-term holder supply, right? So as a percent of circulating supply, Bitcoin that's basically haven't moved in 6 months, UTXOs that haven't moved in 6 months, less short-term holders, less exchanges, right? And so we're basically at like 80%, this all-time high. You can kind of see, you can kind of feel, right, the interplay of like hodlers and the cycle, right? Stack sats, stack sats, stack sats, never sell. All of a sudden, there's just not enough Bitcoin to go around. Some capital comes in, and Bitcoin's price goes parabolic. And to the mainstream, media, or to the legacy financial analysts, it's this random thing that comes out of nowhere, and no one can expect it, right? But really, right, like hodlers set the floor. That's actually happening, and that doesn't stop, minus 20% daily candles. Doesn't stop, some like massive liquidations or wipeouts. But this is what sets the stage for the next bull market, right? Supply gets so constrained, gets so tight that all of a sudden, a small amount of capital flows in, and Bitcoin can do nothing but just go up. And you can kind of see that, that long-term holder supply draws down into these parabolic bull markets. What's that saying? Well, you stack for 3 years, Bitcoin 5x's. You take a little bit off the top. That makes sense, right? Okay, so, one of the popular narratives and what I was trying to show with this previous chart of kind of that holder supply becoming more constrained and then drawing down as Bitcoin goes parabolic is, often like the halving is attributed to like Bitcoin's price runs. It's like, oh, well, halving happened, number go up. And, admittedly, like stock to flow is very great for showing that kind of like absolute scarcity. It was, one of the things for me in high school, I saw the stock to flow ratio and was like, well, great, the difficulty adjustment, what is all this stuff? And it kind of sent me down a rabbit hole. I won't lie, it's good content, but it's not really. We have so many other things to look at as to what's actually driving this, and the halving is a really pretty oversimplification of what's happening. So here's global M2. It's taking a bunch of different the M2 money supply of a bunch of different nations, putting it in dollar terms, so not the local currency. It's normalizing in dollar terms, and then the middle pane is the year-over-year percentage change, right? And you can kind of see when there's a massive expansion of the monetary supply, and admittedly, like M2 isn't the perfect measure of money supply. It takes into account bank reserves and all this, financial jargon, whatever. We're not going to get into that. But really, like the rate of change is what is important here. That's what's, kind of what you should take away. And look at that rate of change of the money supply, the global money supply in dollar terms, and the Bitcoin price, right? There's something there. Coincidence or not, who knows? But there's obviously something happening there with that chart, right? Bitcoin's, just recently became this macro asset, but it's kind of always been one, right? Even though there wasn't, the big TradFi funds and Larry Fink talking about it, and 5 years ago they were saying it's a money laundering index, and now they're saying, oh, Bitcoin's a global asset. Well, Bitcoin's always been a macro asset, right? It's always kind of gone with the tide of this. Here's another kind of comparison, right? Major central bank balance sheets. Bitcoin's market cap percent. Okay. And obviously, major central bank balance sheets have gone up and will continue to go up because there's going to be a whole bunch of debt issuance. 2 minutes. Okay, geez. All right, so Bitcoin leverage, right? It's been a native crypto game for a while. Crypto collateralized open interest, right? BitMEX, right? There's no fiat rails, no stable coins. You send in Bitcoin, you get Bitcoin leverage, right? This is just derivative casinos, right? This isn't the leverage we want or the leverage that's going to come, right? Here's another example. WBTC, I get it. Ethereum trust model, it's a wrap token, whatever. But people are using Bitcoin as collateral, right? Here was an example of the recent cycle. Grayscale, right? Grayscale ETF. It was a closed-end trust, so there was a premium to discount to NAV. It ended up wrecking a bunch of people. But again, 600,000 Bitcoin. It's collateral. A bunch of people, a bunch of hedge funds, a bunch of neobanks use it as collateral, right? They end up all getting wrecked, of course. But what am I getting at here? Okay, so who knows the timeline? The ETFs, right? Some people have different opinions on them. They're coming. They're definitely coming. right? Larry Fink, all of them. BlackRock, iShares, Vanguard, they're coming. The investment banks, there will be Bitcoin ETF. Right here I'm showing, this is a BNY Mellon slide, a huge investment bank, $50 billion bank, right? This is showing ETFs and equity as a percent of their collateral, right? So collateral for in the banking industry. And again, like, I'm not like a bank, a TradFi simp here, but like, they're coming and this is what they do. This is a Goldman slide, right? You can leverage equities, ETFs as collateral and borrow basically at Fed funds. Up to 25 million bucks. This is for private clients, right? So what are we transitioning from here? We're transitioning from crypto degen trading, crypto collateralized, Bitcoin, Luna, Celsius, Binance, degenerate crypto leverage, right? To Bitcoin entrenching itself on the asset side of this global balance sheet. Of $100, $200, $300 trillion fiat liabilities, Bitcoin's monetizing on that side, right? So, last point, and I'll wrap it up here. One of the main opponents of like, the ETFs are bad, right? The financialization of Bitcoin is bad is, well, look at what happened to gold, right? TradFi basically neutered gold. It's fair. It's a fair statement. The paper markets for gold. Well, you can't teleport gold. You can't settle gold instantaneously or in 10 minutes across the world, right? So these paper distortions never really get resolved. They can continue to play these paper games. Whereas, say, with Bitcoin, right? Here's Bitcoin spread, Bitcoin spot price, CME futures. You look at what happened post-FTX. CME futures was trading at like a 5% discount relative to the spot market. And what happened, right? These guys all got wrecked when Bitcoin started to pump. So the data now is saying, at the very least now, is saying that even though CME is like 25% of futures volume, of futures open interest, and remember, CME is non-Bitcoin settled. It's a futures contract, but it's settled in cash, right? You park treasuries as collateral to trade Bitcoin, and it settles in cash, right? So is this bad? Well, good or bad, they're still not suppressing the price, right? Up or down, they're going to have to settle, and that spot rate is really what matters. So I guess last two slides, I'll wrap it up really quick. This is literally the Congressional Budget Office from the United States, their projections for debt to GDP and deficits as a percent of GDP. This is their best estimate. Like, they're padding the numbers here. Best estimates, right? So the debt is going up forever. The dollar is going down forever. That sounds like an outrageous statement. It's not. They're telling you this. There's been 52 instances of countries over 130% debt to GDP ever. And 51 of them have defaulted, explicitly or implicitly, either by not paying their debt at all, just saying, sorry, I can't pay you, or just currency devaluation is how you get out. The US has a money printer, so it's going to be option 2. They're going to devalue the hell out of the currency. So this is to say that Bitcoin is going to nestle itself on the asset side of the global balance sheet. It's going to continue to get bigger and bigger and bigger, and this is our Trojan horse. The ETF, investment banks, yes, we're going to encourage them to come in. They're going to nestle it on the asset side of their balance sheet. Instead of paying down the liabilities, it's going to grow as a greater and greater share of that asset until it is systematically important as an asset, just as housing is, just as equities now are, as on the asset side of that balance sheet, right? Equities are systemically important for US individuals, pensions, 401ks, et cetera. Right? So Bitcoin, this is a natural progression. There's nothing we can do to stop it. And it's a welcome development. It's a natural path of its monetization. So sorry I went a little bit over, but appreciate everyone's